as you join me on a Monday morning. We're watching live. This is a live spacewalk from the NASA YouTube channel, broadcasting live from outer space. Pretty cool, huh? Yeah. So welcome back to another week in the markets, and we do have unexpectedly a rally. Moving forward, let's take a look. And indeed, E-minis are up, and up more than NASDAQ. So it seems to be that we're in this situation now where the S&P is trying to catch up to the NASDAQ. As many market participants know, the NASDAQ made all-time highs at the end of last week. The E-minis, however, or the S&P, not quite to that point, but getting close. So let's take a look at these, and we can illustrate that graphically here. So here is the E-minis, representative of the entire market. And if we go to a year chart, we can see the high, 33.97, about 200 points off the high right now, as opposed to the NASDAQ symbol /NQ has taken out the all-time high. So now the NASDAQ feels to be kind of stalling a little bit as it kind of waits for the other index to catch up. Now, of course, over the weekend, there's been no shortage of financial twit people once again gloating about how they're long the market and how everybody who's not long the market is an idiot. I wouldn't worry too much about these people, because these are the same people who, when we inevitably sell off, will be telling you that they had puts in their pocket the whole time and everybody knew we were going to sell off. So, you know, the financial world is full of like smarty pants people who want to let you know that they are smarter than you, know more than you, and always have the right position on. So you can just get used to that. It's just a typical thing that always happens. So coming into the weekend, fortunately for the position here, we came in Friday short VXX in a big way. And with the surprise number in the unemployment figures, the market rallied, and it was a good profit for this channel, which was great news, because you have to have some profits to keep it going. The job numbers were way off, and there are several articles that came out this weekend about why the job numbers were way off. If you do go to my Twitter, I did link to one of them in the Twitter, but yeah, the numbers were way off as far as like they expected. I think that they were off by like millions of people as far as the jobs number. So they're trying to figure out why they were so off. But at this point, we continue to rally, and it just goes on and on and on. And I wonder if rich people ever ask their advisors, like, well, what's your plan if the market just goes to like such a high point where it's just completely overbought? Do you have a plan? I wonder if rich people ever ask that, because as far as I can tell, fund managers essentially they don't have a plan. They're just long, and they just hang out, and they're long, and they're geniuses if the market goes up. If the market doesn't do that well that year, then they have to take some probing questions on the phone. But beyond that, they're just long. And it seems like kind of like the old way of doing things. Anyway, the VIX up 44 cents this morning, as we have what you could be called weekend effect. Almost every Monday you'll see with the market up, the VIX will be up a little bit due to tracking error. However, the futures are not fooled by this, and the futures are indeed actually down with the VIX up. Front month VIX futures, 25.11, down 21 cents. Second month futures, 26.93, down 24 cents. And let's take a look at VIX Central for a look at our VIX term structure this morning. Now, the VIX term structure has looked pretty healthy the last couple weeks, actually, and it does not disappoint today. However, you can see spot is pretty close to the price of the VIX right now. there is only 24 cents between the VIX price, 24.96, and the front month future, 25.20, which is very tight, of course. However, the 2 months our futures are in contango in a nice way, 6.87%. So that is going to continue our decay to the downside in all of these VIX products. And indeed, if we look at our TVIX, for example, we can see it's right on the border of breaking that 100 level here. And it continues to decay. And remember, TVIX decays not only due to contango forces, but also due to beta slippage, where it's rebalancing every day. A 2 times leveraged fund rebalancing every day is going to slip lower over time. And one way of checking that out is comparing this to its underlying index and see how well it follows it. The underlying index is not going to slip due to beta slippage. So let's take a look also at UVXY here. And I was tweeting over the weekend about how I took essentially the position made $1,200 on Friday coming in short VXX. And so I took a little bit of that profit and I put it into buying some UVXY calls. Now, not working out so great right now. UVXY down essentially 40 cents since yesterday, currently with 23 minutes to go to the open. UVXY 27.11 bid at 27.14, down 40 cents. And what I did was I bought some at the money, well, slightly out of the money calls, paying an average of $1.02 for them. And I spent $600 on calls. So we made $1,200 in profit. I spent $600 on calls. Now, I don't think these calls are at risk of going out completely worthless. And my plan is to get out of them after the weekend, and it's going to end up being a losing trade because UVXY is down 40 cents. So I don't want to sit around being long this stuff for any period of time. However, over the weekend, kind of fun to have a little position on that, kind of a lottery ticket position, I would say, where something crazy happens over the weekend and you can have a big winner. But that didn't work out, so we will exit this position on the open today because we don't want to give back all of the money we made being short last week. Now, my plan moving forward is to reshort VXX in any sort of pop upward. I do believe that this market will sell off. However, in the meantime, I want to stay short these products, but be extra vigilant right now about covering any sign of a sell-off in the markets. It feels like the markets are very sluggish right now. It feels like it's going to take a lot for them to actually turn around and sell off because they're so used to having bad news and just ignoring it that, sometimes it takes the markets a little while to shift gears to kind of break out of their lulling us to sleep and actually move to the downside. We continue to just see the rally, and some people have kind of noted that, like, well, maybe slightly weaker rally than before or whatnot. However, to me, it just looks like the same as always. We're just kind of melting upward every day. But this can't go on forever. A lot of people's the way that they value the stock market is based on profit earnings ratio, PE ratios. And so how much of what multiple is a stock's price to what they earn every year? And notable times when this level was very high was like in 2001 with the dot-com bubble. And as we've seen companies reduce their earnings estimates this year due to the pandemic, that has made these valuations skyrocket. And indeed, by that metric of PE ratios, the market is very expensive right now. Of course, all the financial geniuses they're gonna turn around and say, well, we don't care about that. We don't really use that to value the market now. Of course, they did when it made a good case for them being long. But now that it doesn't make a good case for people being long, they're like, oh, PE ratios don't really matter. So we see the market continue to rally, and we see financial Twitter try to justify it and rationalize it. And it's kind of hilarious because trying to justify what the market does is it's a waste of time as far as I'm concerned. The market does what it's going to do, and we are here to sort of react to it. But I know many people have a different opinion from me on that. So as we look, the NASDAQ went negative a little bit earlier this morning, but definitely kind of coming back here into the open, which is not surprising as that's happened time and time again. This is the normal state of affairs, that the market is melting higher, and we are back in that normal state of affairs right now. So, until that changes, we are trending higher, and we should act appropriately that we're trending higher. I get the feeling and I get the sense that many people are trying to call a top here, are trying to pick a top here, and I get the sense that many people are trying to short this market at every level, and I suspect a lot of money is being lost by people trying to reshort the market. Now, people are obviously doing this all the time throughout history, but it seems like more prevalent right now. And I don't have specifics to point to in the price action for this. I know that there's been several financial people who've come on and kind of isolated certain moves as saying, well, this is short covering here, just by like kind of the shape of different charts and whatnot. But rest assured that many people are cognizant of the fact that the market's gone up a whole lot and are trying to take advantage of that and try to figure out ways to do that. Where there's other people who are just bullish and are saying, well, to some people, when you say the market is being led by 4 or 5 big stocks, that makes them nervous about it. Other people say, well, that just means that all these other stocks are going to have to rally as well, and we're just going to go so much higher. So, kind of that's where we sit right now. Now, gold made a fall on Friday. It was down $45 or $50. It seems to be kind of bid a little bit today, up about $10. Let's take a look quickly at the chart here. And here's a 20-day chart, and we see it down the last few sessions. We've talked about SLV as well. Let's take a look at SLV, also down the last few sessions. But the stock market continues to rally. The VIX under 25 and has been falling like a knife. If we take a look at the VIX chart, we see it. We're still kind of in this. The story is still that we're coming off of the spike. We still haven't kind of defined a new theme for the VIX since the spike. It's still we're coming off the spike. So we will have to see how that progresses. But once again, you can have all these great trading ideas, but always keep in mind the big picture here. The big picture is vol is trending lower. The market is trending higher. And if you try to fight that, you're probably not going to win. Now, certainly that can change. Nobody knows what's going to happen immediately in the future. But for the moment, the trend is still VIX coming in, market rallying, and we will have to see where we go from here. Tesla, 908, huh? After kind of pulling back a little bit last week at the end, now it's back bid again, Tesla. So let's go to like a 10-day and take a look at that. Once again, the monster known as Tesla continues to be a monster. So there you have it. We hope for a good week this week. Last week was a good week for our positions here. Obviously, this UVXY, right now we are long in UVXY calls, which is a pretty rare thing for me to be long calls. But we'll show you the position really quickly, and then I'll let you get out of here. Wait, what am I doing? I'm sorry. I'm talking out of my I'm talking wrong. It's actually VXX that we're long calls in. So we are long 6 of the VXX June 30 calls. Now we are lower by like 25 cents right now, 23 cents. So these may not move at all, but I'm not planning on staying in them. So over the weekend, it was kind of fun to have a long position on, but it hasn't worked so far, and we're slightly down. So I will launch out of this position probably close to the open today, and we'll move on to greener pastures. I don't want to give back the money that I made last week if I can help it. So that's kind of where we are. I'm kind of becoming more aggressive now as I watch during the day. If we start to sell off, I've been kind of staying close to the screen so that if we do get a sell-off, that maybe I can jump on a couple of these VIX ETP calls to try to kind of dynamically trade volatility more in kind of like a day trading type style by watching the market, and if bad news comes out or if we start to really sell off, to kind of try to jump on some long options and kind of scalp a little bit of stuff. That's kind of my new fun thing to try out. I don't know if you folks have been watching these Karen videos over the weekend. Really funny stuff. And also, I've gotten more involved with my online video game that I talk about sometimes, Star Citizen. I've been playing that a lot. That's been kind of fun. And that's kind of where we stand coming into the market open today. The future's not doing a whole heck of a lot, hanging out around where they are. The E-mini seems stronger than the NASDAQ right now, but really just very normal, as I call normal market activity right now, as the markets just continue to melt higher. I know it's frustrating, folks, but don't fight it if you want to hold on to your money. It's not up to us to decide what the market should do. It's up to us to try to make money on what the market actually is doing. And right now, being long the market makes you a genius. So until that changes, that is the reality and the truth and how we need to trade right now. What's up, Spencer? How's it going? Risk on, risk off, Mr. Miyagi. All right. So that's kind of where we are as we head into the open here, about 12 minutes till the open. I'd love to say we're definitely going to sell off from here, but it doesn't feel like there's a whole lot. For us to sell off, we need a lot. This is obvious, but for us to sell off, we need a lot of people to sell stuff, and there just doesn't seem to be the willpower from anybody to sell stuff. It's kind of like, rich people who are long all this stuff and making money. They're like, oh, that's great, the market's back up. But it feels like enough people missed out on the rally. A lot of people missed, when we were down the most, were bearish, and I believe a lot of people missed out on parts of this rally. So now that they're back in the market, they're very hesitant to get back out again. So we haven't seen any sort of consensus to sell this market off, and let's face it, for the market to go lower, we need sellers, and they're not there. So that's where we are right now. Can this change? Yes. Is the news we see outside of the stock market not reflecting the stock market? That's true as well, but it's very often that the stock market does not follow the news. And many smart people have suggested that you not watch the news when you're trading because it's just going to mess you up. And there's certainly some truth to that. However, I would recommend watching the news while you trade. Okay, so there you are. Best of luck trading this week. I will check in with you very soon because I like to keep tabs on everybody. And join us tomorrow for another show. Thanks for watching the Short Vol Show live on YouTube. Have a great day.